Hey, welcome everyone. Pat Mitchell here with Trick Trades, and today I'm going to do a really quick, to-the-point tutorial on how exactly to plot a trend and then how to develop a trade plan around it. So before I go any further, just a reminder, the link below is in description for our free masterclass. Check it out. It's great. It's been really well received, and I know you'll enjoy it, so check that out. So Netflix has been on a tear. A lot of the run has to do with the lockdown that people have been with quarantine, and Netflix has basically become a necessity. But with every run up, there comes a point where it needs to just naturally pull back. And we use trend lines in order to get a good gauge, a good idea of when that pullback is ready. So if you miss the long, so if you weren't able to catch the long on it, instead of chasing it, you just sit back and you wait. You wait for an opportunity to go short. Now, we'll see if that opportunity does happen, but that's kind of beside the point. I'm gonna show you exactly how to plot a trend line and what to watch for, and then how, like I said, to develop a trade plan. A trade plan is something that is extremely important, but grossly overlooked by a lot of new traders and struggling traders. That's one of the reasons why they struggle. They're struggling because they don't have a definitive plan or strategy around the trade. And that's where a lot of people fail. So I want to help you guys out with that. So let's dive right into the charts. Let's get into it. And I know you'll enjoy it. Let's rock and roll. So Netflix, like I said, nice big run up. We have a peak, if you follow my mouse, so a peak, then a valley, a peak, then a valley, now a peak. Now what comes next? A valley. Now, that's the natural progression of stocks. Stocks come up, stocks come down. So how do we plot trend lines? Now, there's a couple different ways that you can plot it. You can plot it from here, which is respecting gaps. Okay, now you can also plot it from this high here and work it up, and she's also hitting there. Either way, it's right at this peak. So if we zoom in, you can see it's very, very close. So this video is being recorded pre-market, just as a heads up. So I'm gonna draw that one more time so then you guys can see. Draw that one more time. I like going from the high of the wick. That's how I like to draw my trend. And even with a short-term trend, if we were to draw it from here to here, it would still be testing and touching. So now what do? Now what do we look for? Well, we want to develop a trade plan around this, because now we can look for a short. Now the market is gapping down just slightly, very slight. So if we go to the intraday chart, slight gap down, okay? So this is where we closed, slight gap. Now the plan. So how I would be looking at this on Netflix is as follows. I would be looking for a resistance level, a nice close resistance level that I would be looking for a pop. So basically, as soon as the market opens up, a run up into that level to short. Now, I've got a level here of not the previous day, but the day before that, that first major resistance level at 468.59. I would be looking at that for a potential short. So with that said, as soon as the market opens up, depending on what direction we pick, I would be looking for a test of 468.59 for the short. And as it's coming into that level, I would execute the short. Now, if we take a look from that level of execution up to highs, there's about 5.25 points. Now, that's pretty wide. That's a pretty wide risk. That risk is something that I would be not overly comfortable with using any size with. So there's a couple of ways that you could do this. Now I'm going to mark this as my stop, so we'll use red for that. Okay, it's kind of an orange. Let's fix that. So there's that, and here's our level. So I'll change that to green.
That's our area of execution. Now, if it comes up, I would normally feel pretty comfortable with using 2 to 3 points per share of risk. So my stop would be about 3 points above that, but we always need to use technicals. Now, you can take a look here. Every resistance zone is a potential place to plot your stop. So you can have a stop at just above 470, which is using a whole number as well. And then you can use a stop here at 472.57, which is another resistance level. Personally, for my taste, even though I said I'm not comfortable with that level of risk, I would still have to risk up here at high of day, previous high of day. And the reason for that is because that's your major resistance level, and that's gonna offer a lot of protection, okay? Not only did it test that once, but it tested it twice. There's gonna be a lot of people protecting their shorts up here, okay? So with that said, I would risk off of this. Now, how do you manage that risk if you're 5 1/4 points away? Well, you manage your risk through size. You use small size, and that's it. That's all we can do. As traders, we need to manage our risk. As for targets, I would be using a main target of, now if we could get it all the way back to these highs at 458.97, so 459, which is also the 5 EMA on the daily, and you can see it likes to test that 5 EMA. Perfect. That would be my main target. Now, with a short in here, I would be looking to also pay myself, take a partial profit here, and then somewhere in between as well. So that would be the trade. That would be the trade plan. And whether it works or not, remember folks, that's kind of beside the point. It's about developing a trade plan, sticking to your trade plan, win, lose, or draw, and working that plan.
Okay, folks. Well, I hope you enjoyed it. I hope you learned something. And make sure to check out the tricktrades.com free masterclass. Link is in the description below. Go check that out. And check you on the next one, folks. Adios.